Hi, I'm Phil Thompson and thanks for joining me for Phil's Finance Fix. Today is the last video in our shares versus property series and I'm going to be telling you what I think the best investment is. Heaps of people ask me which investment I think is better, shares or property. We'll first do a recap on the comparisons from the last 9 weeks, taking out any behavioural biases. Property's main advantages are the amount that you can borrow against the asset, the investment returns when you factor in the low volatility, and the ability to make capital improvements on the property. And shares' main advantages is the ability to diversify, ease in which you can buy and sell the shares, tax effective and flexible income, high liquidity, and low transaction and ongoing costs. My opinion is that the best investment out of these two is both. You shouldn't be looking at either investment as one or the other. They both have very distinct and different advantages of which smart investors are utilising to create wealth. For example, if you've got an investment property that's costing you 15 grand a year and you're only receiving 12 grand in income, over the course of the next few years, the rental income will increase and therefore the property's ongoing costs will be less than the ongoing income. And you may think about using the small amount of excess income to invest into a share portfolio every month, or vice versa. If you've got a share portfolio, instead of reinvesting the income, you may want to look at using the additional income to help you fund the borrowings of an investment property. Another really important reasons why you should think about the balance of different investments is to reduce the risk that you're taking on by diversifying across different asset classes. I fundamentally believe that the best choice that you can make when investing is not the choice to buy shares or properties or bonds or cash. It's the choice to take action and the choice to manage your behaviors. So most people, when they start thinking about investing, they spend several years saying, oh, we'll do it next year or when we're less busy. And then they spend a year or two browsing around, doing some research online, and then another solid 6 months of serious research, looking at which investment is best for them. Knees deep in money magazines and investment forums. And only then, as long as they have not become too apathetic towards investing, will they finally make the plunge to purchase that house or shares after years and years of consideration. Then, once they've finally purchased that investment, they're constantly worried when they read about the Greek debt crisis and the effects of the share market, or if they can afford the debt they've just taken out on the investment property if interest rates go up, or headlines saying that there will be a property bloodbath when the property bubble bursts. This is exactly what I help clients not do. Our entire business revolves around helping people live for the moment and prepare for the future. That means if procrastination, lack of financial confidence, or simply no time is holding you back from investing and preparing for the future, then please give me a call or any one of the 18,000 other financial planners around Australia and get your personal finances sorted out so you can start enjoying today. Thanks for watching, and this brings us to the end of our property versus shares series, and I hope you got heaps of value out of it. And if you'd like us to do a video series on any other topic, please leave a comment below or contact us using the link in the descriptions. Thanks for watching, and I'll see you next week.